Hi everyone and welcome to today's morning report on Thursday 21st of July with me, Rich Pro Market Analyst at Hantec Markets. It is ECB day and we've got some interesting moves actually on these markets. The Forex markets have taken on slightly more of a risk positive angle. And that's sort of coming with reports again that the bank or the Japanese government is readying a stimulus package of 20 trillion yen, and that's sort of helping to pull these risk appetite or risk assets higher. But there's a slight bit of a retracement going on because there's a little bit of concern of what the BOJ might actually be able to do, and that's slightly driving a little bit of caution in this rally that we've seen recently on dollar yen. But I'll talk about that in my chart appraisal in a minute. But we've also got ECB day, so markets are a little bit cautious in terms of equities in Europe. Not really any real direction that we've got at the moment. FTSE's slightly lower, DAX, CAC, well, CAC's basically flat, DAX slightly higher. No real direction, and basically the ECB is not expected to do anything today in terms of rate moves or further easing measures. However, we could see the Mario Draghi giving hints or comments that would suggest that the ECB is readying a package of easing measures in response to Brexit. Because Brexit is sort of having or would have a negative impact. You had the German economic confidence on the ZEW falling drastically this week, and that could sort of play through with further concerns over inflation targets and such like. So further easing measures are likely to be seen in the due course for the ECB, but exactly when it happens remains to be seen. But there could be comments from Draghi today in the press conference, and that could well pull the euro lower and sort of continue this slide that we've seen in recent days on the euro dollar. There's also weakness on the Kiwi today. The Kiwi is lower after sort of suggestions that the RBNZ is still readying further rate cut. We've seen a slight sort of retracement in the dollar as this improvement in risk appetite has been seen. What we have also got is a slight move higher on the oil contract. On oil prices, the contracts roll over, but it'd be interesting to see if it can sustain a move to the upside. Oil is around about sort of just less than 0.5% higher, but obviously you can see that gap higher at the open on the rolled contract. So that takes me to my chart today, which is silver. Now this is an interesting one because we have seen a correction in silver yesterday as these as the risk appetite continued to improve. Precious metals falling away, gold fell away, silver fell away. Sharp downside move on silver actually. Big bear candle that we saw. Was at 67 cents from high to low yesterday, so quite a strong move to the downside. And look at this support, 1920 is now being tested. If you get a crosshair on it, if it worked, no. Okay, let's do it on the hourly chart instead. 1920 hit to the tick today. So that is clearly a level of support which is under threat. Now if you completed a breakdown of that would sort of form a top pattern. You'd sort of measure it from sort of 2067 down to 1920. What's that? $1.45, $1.50 area. Say $1.50, that's sort of 1770 to the downside. And that would sort of pull you back to this 1780 breakout level. Now 1780 is a historic breakout, as you can see, a historic level of breakout. So that could easily be seen as these momentum indicators correct as well. You've got the MACD lines cross negative, stochastics confirming the sell signal and negative shift in sentiment now. That's at a 6-week low on the MACD lines, stochastics crossover on the MACD lines, and also the RSI 55 is the lowest it's been since early June as well. So these are all sort of more corrective measures. I think it's going to play out as a corrective move. Certainly if 1920 were to be breached, there is further selling pressure, I think, back towards 1850 initially, but probably 1780 in due course if the correction really got going. As you can see here, the hourly chart shows this more sort of corrective move. The hourly RSI failing sort of mid 50s into 60s in the last sort of week or so, really, and going back towards below 30. So that is certainly suggesting rallies are seen as a chance to sell. MACD line's similar sort of situation with move towards neutral selling area. You've got a minor rebound today, which could well pull the price higher back into a sort of resistance area. You got the initial resistance 1970 to $20 is a pretty strong resistance now near term. $20 forming sort of the old support throughout early part of July. And I think that any sort of rally you see back towards sort of 1960, 1970, I think it's probably going to be that sort of selling area, because what you could do, which I haven't done on the chart yet, is sort of draw this trend line in negative. Trend line comes in 1980, so 1960, 1970, maybe even 1980. If you get that, I think that's a selling opportunity on silver now. It seems to be that it's dragging lower, moving averages all falling in bearish sequence, negative momentum configuration on the hourly. It's all pretty much talking to you that 1920 will come under further test today, despite this early rally that we've had. It doesn't look like it's going to last, but 1920 is that key support near term, and if that breaks, you're sort of back below sort of, well, certainly below $19, $18.50, 17.80 could well be seen. So I wish you good luck in the trading on silver today, and I'll speak to you later. Thank you.